strategy performance against historical data. Before traders employ capital in a new trading strategy, it is beneficial to know how that strategy may perform in the markets. While future performance may differ from historical, knowing if a particular strategy or indicator would have been viable or profitable in the past builds confidence for using it moving forward. Once you backtest a strategy, you may also want to forward test it. You can do this by running the strategy with automated orders in a simulated trading mode while the markets are live. This way, you can observe how the strategy performs under current market conditions. But before we do any real-time testing, TradeStation allows you to test your strategies against historical data and analyze the results. The Strategy Performance Report provides abundant evaluation metrics to help you tweak the strategy and attempt to improve the strategy's performance. So, let's walk you through the steps of the backtesting process. First, select the security you want to test. You can test your trading strategy against any security that TradeStation offers. Load the security into a chart and select the time frame on which you want to test the strategy. Let's work through an example. Here is Tesla on the hourly chart. For a backtest, we need to consider the amount of data that we want to test. In this example, we'll load 1 year of historical data. Once the chart is ready, we must add the strategy you want to test. Because the strategies are designed around the calculations of a technical study, it may be helpful first to add the technical indicator or study to your chart. For our example, let's choose an oscillator. An oscillator signals when a security is overbought or oversold. In those situations, prices often change direction, which could be a trading opportunity. We can add the common study known as the stochastic slow to our chart. There are 2 plots on the stochastic slow. When the 2 lines intersect below the oversold level, a bullish signal is given. A bearish signal is generated if the 2 lines intersect above the overbought level. Fortunately, these trading signals can be tested using strategies. TradeStation has strategies based on most of the popular studies available today, so if we add the built-in stochastic slow strategy, the strategy should follow the signals given by the study and generate entries and exits. You can view the list of available strategies by going to Studies and Add Strategy. Most strategies have different suffixes. The LE stands for long entry, while the SE is short entry. Some strategies, like the stop loss, can have LX for long exit or SX for short exit. Combining entry strategies that generate long and short positions will act as a reversal strategy. For instance, if you are currently long and the short entry strategy is triggered, the strategy would exit your long position and enter a short position immediately. The opposite would happen if you were in a short position and a long entry triggered. So let's add the stochastic slow LE and stochastic slow SE strategies to our chart. In the next dialog, you can click Customize to change the strategy inputs. Click on Properties for All to see strategy settings such as commissions, slippage, and trade size, or even check the automation checkboxes for automated execution. But since we are simply testing the strategies historically, we cannot automate the orders yet. Once you click OK, you should see the strategies applied to the chart. In this case, stochastic slow should find every single instance where the strategy would have generated a trade and display signals as arrows on the chart. Blue arrows are long entries, and red arrows are short entries. Lines will connect the entries and exits for theoretical positions based on the strategy signals. The blue line indicates a winning position, while a red line notes a loss. With all the trading signals displayed on the chart, now it is time to gauge the performance of that strategy. Under Data, select Strategy Performance Report. We can maximize the window to better view the information and focus on some important performance metrics. Notice the total number of trades. You want to have a large enough sample to judge the strategy's efficacy fairly. The more trades in your historical backtest, the smaller the margin of error and the more confident you can be about the results. You can increase the number of trades by adding more historical data or using a smaller time frame on the chart. There is a lot of information provided by the Strategy Performance Report. You can see that there are several tabs at the bottom providing different feedback. The Summary tab gives you a general overview of the strategy's performance and tells you if the strategy is profitable. This is perhaps an important piece of feedback for a strategy trader. An unprofitable strategy may need some adjustment or even replacement. Please take some time and explore the many performance metrics on this Summary tab to gauge the strategy's success rate and tradability. Dive deeper into the strategy's detailed performance by analyzing all the other tabs in the Strategy Performance Report. It is a wealth of information that can assist you in determining if the strategy is worth trading or not. TradeStation allows you to test your strategies on historical data to see how they may perform in certain circumstances. This knowledge can build confidence and help you develop strategies to offer you an edge in trading. Thank you for watching.